Hello, everyone. Today is Thursday, April 1st, 2021. Recording this video a day early. We got markets closed tomorrow for Good Friday, so hope everybody gets to enjoy a long weekend, get away from the screens a little bit. My name is Evan. We do these videos every week, and this is our weekly stock market analysis video. And the way they work is we break things up into two parts. In part one, we look at everything that went on this week in markets. So we look at performance, market internals, sectors, correlations, volatility, credit markets, interest rates. We pick apart everything that stands out and looks interesting, looks notable, looks meaningful. And then in part two, we jump into the charts. We look at those longer term trends, try and make sense of the bigger picture and some of those points that we talked about in part one. So hopefully that sounds good to you. Let's jump into this shortened week headlines here. Some of the key takeaways from this week. It was a technology and growth over value week. So the market nowadays is usually, kind of divided in between these two lines where suddenly we care about what's value doing, what's growth doing, what kind of day is it going to be. Well, this week was mostly growth. Value didn't do horrible. In fact, I'm pretty sure it's still closed up. But technology was definitely the nice rebound leadership sector to the upside. We saw the US dollar kind of roll over the second half of this week, and that's only 2 days worth of trading data because it was only a 4-day week. But the US dollar started off pretty strong this week, and then it kind of rolled over on the back half. We'll talk about that a little bit later. And we had interest rates, which, everybody's got their eyes on interest rates. They finished mixed this week. We'll talk about that in a little bit as well. If we look at the numbers here, you can see it was positive across the board. Nasdaq 100 was the clear standout winner here, up almost 3% on the week. Dow Jones is up slightly, S&P up 1%, Russell up 1%, World Stocks minus the US up a little less than 1%. So again, you can see kind of the mix there. And if you look at the 1 month numbers now, you can see that it's almost back to an even race here in terms of the US markets. We're up basically 5 to 7%, almost universally here over the past 1 month. And this is, something that I think is kind of interesting because when we look at some of the names in the Nasdaq, for instance, some of those stocks saw 20, 30, 40% corrections from highs. And when we look here at the index level over the past 1 month, you wouldn't know it. And in fact, some of those stocks are still down, 20% or more from highs. But again, you wouldn't really see it here in terms of the index level. And that's certainly why we go through some of these closer looks of market internals and sectors and all this other fun stuff. So we can understand that and we can actually see what's making the market move in both directions. So if we look at market internals this week, so it's a 4-day week. I have last Friday's numbers in here. So basically, and of course, Thursday's numbers, always when I'm recording this video, I don't have the final settled numbers from the exchange yet. So it's kind of rough estimates, and usually they're kind of lower. Generally speaking. Anyway, 53 net new highs on Thursday, 173 Wednesday, Tuesday was 82, Monday's 194. What you'll notice about those numbers is A, they're all positive, and B, we're getting back into triple digits on the upside. That is very encouraging. That is very healthy because if you recall from last week's video, one of the warning signs, one of the things we talked about was the fact that we started to see this surge up in stocks making new 52-week lows. And in fact, we actually had more stocks making new lows than stocks that were making new highs. That is what certainly would get me concerned from a more intermediate term basis on this market if that trend continued. And when we look at the action this week, that trend did not continue. It actually reversed. So that is encouraging and that is notable. If we look at the cumulative AD line here, you can see strongly positive number. 75% of stocks currently in the S&P 500 are above their 20 SMA. Take a look at this 52-week highs minus lows cumulative graph, and you can see here, this is where we were talking about last week, where we were getting a little bit concerned here, saying, okay, the trend is starting to, kind of peak out here and roll over. And what we were concerned of was this trend kind of continuing to start to pull back here. But as we saw, we got some type of little local bottom here, and we started making new highs by Tuesday of this week. So for me, Tuesday was the real kind of change character, change gears type of day. We started making new highs again, a surge kind of back in the number of stocks making new 52-week highs, breaking out on this rolling basis, and life, of course, looks good here into the close of the week. So that is certainly encouraging and back on a positive footing. If we look at sector performance this week, most of the sectors in the green, and again, you can see technology and communication services, which are basically the big tech names there, in the top of the list. Number 3 was consumer discretionary. So basically exactly what you want to see, kind of tech growth risk appetite at the top of the list. On the downside, consumer staples, that's good, that's defensive. Healthcare, that's good, that's defensive. Materials, that can kind of go either way sometimes, but in the bottom 3 there, that is a good sort of risk appetite, bullish market, so to speak, of what you kind of want to see. In terms of correlations, really still hasn't been anything too meaningful here. I got a couple of things that look interesting to me. One, we'll just look at Bitcoin here. Bottom left, you can see Bitcoin having a pretty strong correlation to the Dow Jones right now, 0.76. Remember, these correlations are past 10 days. So these are at times, very noisy correlations, but they're telling you what's kind of moving together in the very short term. So you got Bitcoin correlated to the Dow Jones. I think that's, kind of mildly interesting there. And we also had, what was the other standout here? Shame on me, because I should have this in my notes. Gold and the US dollar moving inversely correlated. That's kind of classic. No real standouts there. And, I think it was the international markets moving with the Russell right now. This 0.83 correlation is pretty high. So that's kind of interesting that we've got international exposure here moving with the Russell 2000 with a pretty tightly correlation. So we'll keep an eye on that as well. So those are a couple of the takeaways for me. Of course, it's funny. This is probably the chart that gets shared to me the most, or I get comments from the most is sort of, traders here looking at this and, giving some thoughts on this. So I think that's awesome. This data here, I'm putting it together. I'm crunching the numbers, paying for this data. So absolutely, please use it. And if you see other things that look interesting, leave a comment below. Let's, kind of work at this together and see what stands out to you, might help some other traders watching this. So I do encourage you certainly leave a comment if you find something interesting. Volatility coming down this week, lowest close in the past year. So we got a 17.59 close here on the VIX. That's pretty impressive. And that's mostly, what's actually very impressive about that too is it's coming at a 3-day weekend, which is usually where you get a little more fear because, you have markets close that extra day. There's lots of, extra kind of catalysts that things can happen in that window where you can't really hedge your exposure and defend yourself at all. So usually the VIX is a little jumpy and a little more bid on long weekends. And in this case, we closed at new year-to-date lows or new one-year lows. And that's something we've been sort of calling for or thinking that might happen, and it is playing out pretty beautifully. So 17.59 VIX. It's been a long time since we've seen that type of number. I think that is notable. If we look at interest rates and credit here, again, you can see interest rates are pretty mixed. The short end yields are still kind of up and climbing a bit. The 30-year, so the long bond here, so that's a classic TLT. TLT was up, which means yields on the long end were down. Investment grade bonds, high yield bonds, both sides there working higher, so no real scare or worry. The US dollar did still close up. It was up a decent amount more Monday and Tuesday of this week, so it did peel off a little bit towards the end of the week, still closed up. Gold was down, silver was down, Bitcoin was up 6%. Ag was down. This had a pretty notable day here, which we highlighted on our Twitter stream earlier this week. Crude oil was up a little bit. Natural gas was up, but, pretty quiet there in terms of commodities. Report card. First, I think 5 check marks that we've seen here. Certainly in a year, because really volatility is finally back to a more manageable, relatively calm, relative is the key word, level. So we've got green check marks across the board. Report card is a solid A this week in terms of market performance going into the long weekend. Now, if we look at our trading systems here, not a whole lot has changed. I mean, I show these percentages here. So this is where the rubber meets the road. This is how I'm investing my dollars in these 2 trading systems. They're both trading systems that are available on our website in terms of subscription. So if you are interested, I do encourage you to check those out. There's trading that's happening under the hood. I'm not listing out all of our trades here. That would just be too much work to do that on a week-to-week basis. You really are only seeing a little bit of the fringes here move in terms of our percentage allocation, but I think this still gives you a pretty good picture as to, just how we're investing and how we're trading and thinking about this market. So our longer term system still 92% invested right now, 34 positions. Lamerick shorter term systems, 40% invested across 5 positions. There's been some decent trading activity, mostly in the short-term system over this recent week. So that's it. If you want to learn more, there's a link appearing in the top right-hand corner, and we'll be back in just a moment with some charts. We are back. We've got TC2000 open. We've got our equity market grid that we're looking at. We've got a custom smart trend filter indicator applied to all of these charts. Those are the multicolored dots you see, red, yellow, and green. Just measures price, and volume over time, and helps us get a clear kind of picture of trend and trend strength. And we got price itself is the white dashed lines you see on all of these charts. So we're looking at a weekly time frame this week, and for the most part, there hadn't been a whole lot of change on this short week. We still have the S&P 500, which is printing green bullish dots up and to the right. Nasdaq here has been in more uncertain territory. So you can see here we've been printing these yellow dots for the past 5 weeks, which basically just says, look, still give benefit of the doubt to the prior trend, which is to the upside, which is bullish. But it just says that there's some more turbulence going on here. And we've clearly seen that in the price action. I don't think that's a surprise to anyone here listening to this video. What's notable is, despite the strength this week, 2.7%, we're still not, back to a full-on kind of buy fresh green signal here on this weekly model. So I would suspect, and I might have even said this last week, but if the Nasdaq gets just holds the line and continues to push up next week, we will be back to a fresh kind of buy signal there. We'll see if that actually happens. Russell 2000 here, a little bit of turbulence coming in the last 2 weeks, still in kind of that turbulent period, but again, benefit of the doubt goes to the uptrend. We're holding above this smart trend filter, so life here is still pretty glass half full, I think, for the Russell and the Nasdaq. ACWX in the bottom right, still printing a green signal. So if we go down to a daily chart, we look at things a little bit closer. Here is what we got going on. The S&P 500 printed a fresh buy signal this Monday of this week. Prices continued higher throughout the week, so we're back to a buy signal on the daily for the S&P 500. The Nasdaq, so with Friday's action, so we were up 1.8% here on Friday. I'm sorry, on Thursday. It's habit on knowing that my brain knows I always do these videos on Fridays, but we're recording on Thursday. So this Thursday, we're up 1.82%. And we got our fresh buy signal here on the daily chart. We technically had one back here on Tuesday, which gives you, again, the benefit of the doubt to the upside, but then we got a bunch of yellows printed, but we get a fresh buy signal. That's good. That's healthy. That's constructive there if you're bullish on the Nasdaq. Russell 2000, not out of the woods yet, still printing yellow. ACWX still printing yellow, and basically in chop mode here for both of those indices. So let's take a look at some of the price action. Let's look at some good old Japanese candlestick analysis here and look at some supply and demand price levels. And if we look here at the S&P 500, there's not a whole lot to say because the S&P 500 broke out to new fresh all-time highs. That's a bullish development. That means there's no overhead supply. That means the market's trading at the highest price it has ever traded at. And for that, and basically what that tells us as traders is that we want to be optimistic here. We want to be looking at buy setups and riding this trend to the upside. The relevant breakout level that we broke out from this week was right here, this 39.80 area. This was the high from early mid-March. We pulled back off of that over the past couple of weeks, and then we basically launched higher here. We talked about this being a very significant day last week, and this being a almost equally significant day in last week's video. We had this being the retest or the outside reversal day of a key level, and then we had key follow through to the upside on this past Friday. And we highlighted the significance of that, saying that that was very constructive and that the bullish case this week would be to basically just hold the levels up here and then, not give this reversal and follow through day back, to hold the line up here and then ultimately push up. It's exactly what happened this week, and that is bullish. That is constructive, and that means buyers are taking control of this market. So the new levels that we want to pay attention to, frankly, is just this breakout level, 39.80. The level we broke out from on this Thursday is now basically what we want to see held to the upside to keep the utmost kind of positive momentum in this market. If we start rolling back below here, then, you get just the chop, the range, the sideways that could ensue if we fall and hold back in this area. And then 38.70 or so, that's basically the prior level we were looking at, and that's where we would focus our attention to if we lose this upper level. So S&P 500, very constructive there this week. The Russell 2000, you can see definitely not breaking out. So we're still, let's see, about 4%, a little over 4% from these prior all-time highs, but we did hold the line from last week. Remember, this was the reversal last week we talked about, reversal, follow through. We pulled back a little bit into start this week, but then we pushed higher. So the Russell looks like it just wants to maybe take a back seat for a little bit, maybe chop around, maybe grind higher, but just at a smaller, lower pace. And the Russell has been working pretty hard at leading this market up. So maybe it's the Nasdaq, the S&P's turn to start to lead a little bit. But for the Russell, I'd say, holding over certainly last week's lows here. This Thursday low is going to be very important, but still this 216 area that we've been keying off of is also an area that I'd be paying attention to on the downside. On the upside, you basically have the all-time highs up there around 234. Now, if we look at the Nasdaq 100, and I think we were kind of simplifying things with this chart here over recent weeks. So the Qs obviously was the underperformer, coming basically into February or late January. The Nasdaq 100 started to underperform a bit, and we started to see those bigger corrections in some of those individual components, the Teslas, the right down the board, a lot of the semiconductors, NVIDIA, Shopify, everything that's been working. Zillow had, started to pull back in a more meaningful way. We had this kind of two-legged correction down here, and the level that we've been keying off of is this 310 area. The 310 was the area we wanted to see hold, and we got that last week. Again, we had Thursday's little outside bullish reversal day. We got the follow-through Friday. Things were weak here Monday and Tuesday of this week, but Wednesday certainly changed that. We launched higher, and then we got more follow-through here on Thursday. If we look at a intraday time frame here, which we almost never do in these videos, but this is let's go to a 30-minute chart just to clean it up a little bit more. It's a 30-minute chart right here, and basically you can see that we've had this base developing down here, and you've got this, I guess, some might look at this as some type of inverted pattern here, where you've got kind of the neckline or the, level to break out from right up here around 323, and you can see that's exactly where we gapped up to and chopped around today. So if we can get more follow through here in the Nasdaq, if we can kind of, break out to the upside upside from this base that we've been carving out here, then I think we could be back at all-time highs, in a week or two, or in pretty short order if that breakout gets underway. So the Qs, I think, obviously looking pretty constructive here this week with the action that they put on. They were the biggest gainers this week, and that's something to look forward to. If you're bullish and you want to see this continue, then it's holding up and moving back over 325 next week. So that's it. I mean, that's the price action there. It's the trends of the major markets. The other thing to touch on is VIX, and like we talked about, VIX here closing at 17, which is the lowest level for the volatility index since February of 2020. This is also very constructive, and this is a pretty powerful combination, because basically what you're getting here now is you're getting the market sort of recognizing or getting comfortable at least with a lower volatility environment. And if we're going to start to see the VIX trade in the teens, and quite frankly, even get back to these more calm kind of trending levels down here, which I don't know that we're going back to a 12 VIX anytime soon. But even if we get a VIX that's settling in between 15 and 18 over the next, couple of weeks, you got the Nasdaq, which is coming out of a correction here. I mean, you could really enter, and you got earnings season coming up as potential catalysts. You've got some catalysts, and you've got the ingredients here for a market that really could just continue to trend to the upside. Now, again, I don't want to sound, blinded by only bullishness here. I am 100% willing to change that, outlook or idea. If we start to see breadth deteriorate, or if we start to see the VIX jump back over into the 20s, then, I am all bets off on that scenario. But based on what the data is telling me now in terms of breadth expansion, number of stocks hitting 52-week highs, volatility coming down into the teens. You got the Nasdaq, which seems like it wants to firm up and start to move right here. Could really be in for a good kind of quality, healthy environment, as long as earnings season is a positive catalyst and not seen as some type of negative catalyst, because earnings season is basically right around the corner. So that's sort of that's the high level framework on how I'm looking at this market right now and how I'm thinking about it. Obviously, we're taking things day by day, and we'll let the data sort of dictate how we're thinking about this. But hopefully that's helpful. Let's jump into a couple of other charts here. So let's look at commodities. So if we look at commodities here on the weekly time frame, we still have basically the top is a mess and the bottom is still looking good. That's been the trend that we've had. The top is metals. So GLD, you can see, is still in a bearish trend here on a long-term weekly time frame. Silver is printing a fresh sell signal here on the weekly time frame. So neither of that is good for metals there. We saw oil continue up. DBC, which is basically commodities with heavy oil, is also still bullish on the weekly chart. If we go down to a daily chart, we get a more mixed picture here, and we did have some encouraging action in gold particularly towards the end of this week. Same thing with silver. Let's actually just move right to it. If we look at gold here on a daily chart, this has been just a tough 6 months, 7 months, for GLD. It's been very choppy, mostly to the downside here. I don't know if it's finally catching its footing here. We've got some, we got the MACD, we got momentum that's trying to race higher here. So we've got some positive divergence brewing. We did manage to hold on to the early March lows this week. So we had an ugly day here on Wednesday of this week, but then we came roaring back on, ugly day on Tuesday, roaring back on Wednesday, and then follow through on Thursday. So we had a good end of week save. That I think you can tie right to what the US dollar did, because the US dollar jumped higher here early in the week, and then the US dollar rolled over towards the end of the week, and you're seeing basically that inverse correlation play itself out. So GLD, it still looks like a mess, but perhaps maybe this was the worst of it Tuesday, on the Tuesday washout. So keep an eye on that. I would have loved to see just heavier volume come in. We didn't get that. So that just gets me, again, more mixed on this. Silver, this one here did break below the March lows. This one's looking a little more messy now. It's still overall sideways over the past, 8 months basically. But, it's still just choppy and doesn't really excite me one way or the other. Let's look at some sectors and industry. So I put together this couple of scans here. I think I said I was going to work on it. I didn't get to work on any of this week. And notice there were no, so I basically put together two scans that are going to show sectors and industries that are interesting. Basically either heavy volume or strong closes or notable action. So nothing bearish of interest this week, looking at sectors and industries. So that's pretty interesting. But we got 14 names here on our bullish of interest list. So let's just page through them pretty quickly. I'm not going to go through all of these individually. Some of these are industries. So that means they're a very specific smaller group of stocks. So like this one is media, diversified. So basically got a little bit of a heavier volume week. And remember, this was a short week. So if something's trading heavy volume this week, you had a shortened week. So that's, just keep that in mind, a little more meaningful. So, you had a nice bounce back. Last week was pretty horrendous for this sector and or industry. Bouncing back this week. Rental and leasing services breaking out. Look at the volume that came in this week. So let's take a quick peek at what stocks maybe even make this up. I don't recognize a whole lot of them, but this is not really my wheelhouse of stocks that I trade a whole lot. But this list here is showing you some of the stocks that were moving up in this list. If we look at Telecom Services, this was a constructive week here. Nice sideways range been developing in this space too as well. So this looks like it's potentially actionable for a breakout. Communication services, telecom, aerospace and defense breaking out this week. So you can see 2 weeks back. Now it's breaking out. MACD's leading, heavier volume. This looks good here. Aerospace and defense for higher. So you got more culprits in here like the Boeings and the kind of more notable names, Lockheed in this as well, so on and so forth. If we look at building and materials breaking out, look at the volume that's been coming in here. And the volume came through last week. I'm pretty sure this was on the scan last week. And then we saw, again, just more follow through this week. So that was constructive. Railroads, again, this was hitting it yet last week. You're seeing more follow through this week. That's encouraging. Business services also breaking out here from this nice range. Heavier volume, that's constructive. Engineering and construction also was from last week as well. Pharmaceutical retailers starting to move this week. It's an interesting one. This has been in a tough trend here for multiple years, but it's starting to get its act together, starting to trend up. Trucking, farm, and heavy construction machinery. And last but not least is XLU. XLU, I think, is mostly on here for the sideways range it's developed here and starting to work itself higher. So a couple more. Publishing and lumber and wood. So pretty industrious, actually, when we think about the names that were on here. I didn't see actually a whole lot of tech, even though tech was really strong this week. So that's kind of curious. But that's what I got. That's kind of the roundup there. Sectors, we got volatility, we got price action, we got lots of stuff. So let me know in the comments below what you thought about this week, what you're looking at for next week. Love to hear the thoughts and comments from everyone listening. And I hope everybody has a great long weekend and enjoys the day off. As always, we do these videos every weekend, so you can subscribe to our YouTube channel, give it a thumbs up if you like it, share it if you like it even more. And you can also follow us on thetraderisk.com, where we publish all the videos on a week-to-week basis. So that's it for me. We'll see you back here next week.